All right, everyone, welcome to Technical Thursdays. So, in this series, what we're going to do is we're going to grab something that's happening currently in the market, and I'm going to use that to try to paint topical examples of technical ideas, technical setups, technical properties that I think can help people who are learning technical analysis. The quant stuff that we did last Wednesday, that's going to be, again, a lot of really in the weeds, more quantitative, nerdy type thing for people who want to be very systematic and back tests and things like that. This is going to be just pure charts. So let's take a look at something that's happening in the market currently that I think paints a really good example. So here is SMCI. Now, some news came out today, something about DOJ investigating something in SMCI. Let's actually clean up the chart here. But how could we have known that this potentially could have happened, right? This is what I want to highlight here is this is an amazing example that we can look at for relative strength. It's not amazing if you're holding SMCI. It's down 15% today, you can see up here, but it's a great example of why we look at the relatively strong sectors and relatively strong parts of the market. So, how would I know before this happened? Let's say, let's pick a date. How would I have known? Let's say the 10th, the 11th, September 10th or September 11th, somewhere around this time. How would I know that SMCI probably isn't the thing that I should be swinging the bat at if I'm interested in the semiconductor or the AI space, which this is one, but I should be focusing elsewhere? Well, first of all, you can see the massive fall from grace. But there's been a lot of that, right? If we just go to SMH, which is our semiconductor sector, which is going to have a lot of semiconductors in it, that also had a pretty big fall from grace as well. Even if we look at NVIDIA, that had a pretty clear fall from grace here as well. Now, if you can just eyeball, so let's duplicate these charts, create two charts, you may be able to simply eyeball and kind of see what I'm going to look at here. And this is one way to look at relative strength. Now, why do we focus on relative strength? This is something I'm sure I'll go over in future episodes, but there is a lot of academic study. There is a lot of just kind of personal study on empirical research, back tests, everything on the fact that things that are relatively strong to one another. So Nvidia being stronger than SMCI, even in they're in the same sector, sticking with the relatively strong name, that's going to do something of some kind of importance. Right? If I'm continuing to stay in the strongest names, good things are going to occur. But I want to just talk about a couple quick ways that we can spot relative strength. One of them is if I just look at these by eyes, right? These charts are roughly the same size, give or take. They're in roughly the same sector. I just picked NVIDIA, but you could do AMD, you could just do SMH, which is something that's very common that people do, where they'll look at, say, SMH, they'll look at a stock, and then they'll look at the overall indices. Now, one is you can probably eyeball that at least since the highs right here, SMCI has been a little bit weak. But if you need a little bit more help, if you're a little bit newer at this, you could actually just mark those. Say, okay, we had this high on SMCI, and let's just line that up with this high roughly on SMH. How close are we to that high? Just again, eyeballing, rough estimate, around this area, which is 1,000 on SMCI, it's probably lining up to around this area on SMH. As SMH bounced to that high, SMCI fell and did not, right? Well below that high. We make another high down here. That's probably going to line up to this high right here. And that's really where I think the story starts to get told, right? So if we look at this high, and this high happened early September, late August, if that would be this high, sorry, this high right here on SMH, which is late August. Now, as the market gets closer and closer to that high, and SMH does not, that should be a pretty decent divergence that, hey, SMCI is relatively weak to the market. So if the market bounces, SMCI is likely going to lag that bounce. And if the market falls, SMCI is probably going to fall further than that bounce. The other way you can do it is simple moving averages. So let's just take an example where we're going to take an indicator. Let's just do a very simple SMA, and we could do a 50 period SMA. And then let's on SMH, we'll add the same thing. We'll go and we'll add a simple 50 period moving average. This could be a more objective way to look at this. We'll zoom in a little bit here on both, and we can zoom in here on SMH, and we'll zoom in here on SMCI. So on the 20th, right in this area, SMH crosses the 50-day moving average. Again, it's a simple moving average. It's just saying, here is the last 50 candles, add them up, divide it by 50. No magic to this, but it's a good point of reference where 18th, 19th, 20th, again, we're under that 50 period moving average. So if we go back and we have the 18, 19, 20, we are well below, significantly below the 50-day moving average right here and right here. Now, what moving average to use? That's going to be all about your time frame. If I'm looking to make a scalp and I want to be in and out maybe in a day or two, I might pick something like the 10 period or the 5 period and say, I'm going to look at that as my point of reference. And I'm going to look to, if I'm bullish semiconductors, I'm going to look to get involved in the thing that is above or furthest above its 10 period moving average. If I'm a longer term trader, I may use something like a 200. So let's take a look at this as well. Let's go out and we're just going to go into indicators and we're going to change this now instead of the 50, the 200. This is a very common kind of long-term health of the overall instrument that you're looking at. And so instead of the 50, we're going to look here at the 200. The 200 moving average is something that I use a lot in a lot of my algorithms, a lot of my testing. Just a simple way to say if you're above an upward sloping 200 period moving average, you're probably in an uptrend. If you're below the 200 period moving average, you're probably in a downtrend. So if we go and take a look at this and we look at what time did we cross below the 200-day moving average? Early August, so August 5th. Now, if we go back to August 5th, we are trading above that 200 period moving average, where this is where we're below that 200 period moving average. And the SPY or the SMH never breaks below its 200 period moving average. The SMCI never gets above its 200 period moving average. So all of these are just very simple and kind of quantitative ways that we can measure relative strength. Now, if we go from SMH and go into something that's just more directly aligned with the AI play, look at NVIDIA, never got anywhere under its 200 period moving average. So if I'm bullish the semiconductor or the AI theme or sector, and I'm going through the list of names to look at, I'm going to gravitate towards an NVIDIA. I'm going to gravitate towards a name that is above its 200-day moving average, 50-day moving average, if SMCI is below, right? So let's do another reference. Instead of talking about how bad SMCI is, we can talk about how relatively strong NVIDIA is. So now we have the semiconductor indice on this side, and we have NVIDIA on this side. And you can see this down candle, this was that Japan carry trade craziness. We open below the 200-day moving average, and then we close above it. And NVIDIA, we're still much farther away. A very systematic, quantitative way to say NVIDIA is stronger than the semiconductor industry. This is a leader in the space. This is something I potentially want to look at. I potentially want to invest in if I am bullish this thesis of AIs and semiconductors for whatever reason. I'm going to gravitate towards this and I'm going to stay away from that. And just simply by doing that, you avoid these names that are in downtrends. Now, if someone's out there saying, well, I want to buy the laggard, absolutely, this could be a way to look opposite so you know which one's a laggard. I just like to follow the statistics and the research that shows buying strong stocks in the long run outperforms trying to buy weak stocks and to pick bottoms. We could look at this in the banks. I remember when all those the regional banks were going bankrupt. A lot of those, well, all of those were under a declining 200-day moving average. There's never been a bank that's ever gone bankrupt that's been above its 200-day moving average. It's an interesting fact. And this is not to say there's a magic power with the 200-day moving average. It's just to say find a metric. And when you have a theme that you want to invest in, make sure that whatever it is you're looking at, 50-day moving average, 10-day moving average, 200, doesn't matter. Just make sure you have a point of reference. You can eyeball it. You could say looking at this low right here, which happened on the 6th, which would line up with this low right here that happened on the 6th, right? We're on the 6th right here, and then we're on the 6th right here. You could say, how far are we above that low, right? Right now, SMCI is at that low, NVIDIA is well above it. So whichever metric you pick, just pick one and say, this is now how I'm going to rank my stocks. So whenever, whatever scan or algorithm or system it comes up with, and it has 10 names that you could potentially buy for a trade, now you have a way to rank them by what's strongest and by what's weakest, depending on what you want to do. Like more of this
Right at the
content,
end.
or if you want access to the output of my trading algorithms and Discord room and things like that, make sure you go over to statsedgetrading.com, and I'll see you guys in the next one.